Have you ever heard your accountant talk about double entry or double entry bookkeeping and wondered what on earth they were on about? This video aims to give you a short plain English explanation of double entry. Double entry was first described by an Italian mathematician called Luca Pacioli in the 15th century, so it's been around a good long time. The basic theory is that every transaction you put into your bookkeeping goes into at least two different places. These entries into your books will be either a debit or a credit. Meet Molly. She's just about to start her own business cleaning offices and homes, and she wants to understand more about double entry bookkeeping. She asks, what's a debit and a credit? To answer that, I have to describe the four categories of bookkeeping account a business might have. Anywhere there's money in your business will have a separate bookkeeping account. The business bank account is a bookkeeping account. But so is your petty cash tin. And you'll also have a bookkeeping account for every customer who owes you money, and so on. Here are the four categories of bookkeeping account. A business owns things like computers, desks and furniture, and the money in its bank account. These are called assets. For Molly, this would be her vacuum cleaner and carpet washer. A business might owe money as well. For example, it might have bought something on hire purchase and so would owe money to the hire purchase company. This is called a liability. Molly put some of her own money into the business, and so the business will have to pay her back sometime. A business will sell goods or services and receive money in exchange. Molly sells her cleaning services and her customers pay her. This is called income. And a business has to pay running costs, like buying stock to sell or paying a telephone bill. These are expenses. Molly's main expense will be travelling to her customers' offices and homes. Molly thinks about this. But then, when a customer pays for services, that would go into two places. It goes into the bank account, which makes it an asset. And it's money in exchange for services, so it's income. Absolutely right. That's double entry for you, because everything has to go into two places. Two different bookkeeping accounts. I'm now going to explain a bit more what debits and credits are. An increase in an asset or an increase in an expense is a debit. An increase in a liability or an increase in income is a credit. But money going into my bank account says on my statement that it's a credit, says Molly. That's from the bank's point of view. When you pay money into your bank account, they owe it back to you, so from their point of view, it's a liability. So taking the above example of when a customer pays Molly for cleaning services, that's increased the bank balance, which is a debit, and it's also increased the business's income, which is a credit. So the double entry for that would be debit bank, credit sales. Let's look at Molly's first day in business and what entries might go into its books. In the morning, Molly puts £5,000 into the business's bank account. That's money she expects the business to pay her back sometime, either when it can afford to or when she sells the business. So the double entry would be debit bank for the increase in the business's bank balance and credit capital introduced for the increase in the money the business owes to Molly. Molly goes to Argos and buys a vacuum cleaner, carpet washer and other equipment, costing £1,000 altogether, using the business bank's debit card. The double entry would be debit assets for the increase in the business's assets, it now owns a set of cleaning equipment, and credit bank. It's now the afternoon and Molly's ready to start working. She cleans a small office, charging her customer £100, and the customer pays her in cash straight away. The double entry would be debit cash for the increase in the cash balance and credit sales for the increased income. Molly cleans a house which her customers, Mr. and Mrs. Smith, are selling. This time, because it's a bigger job, she charges £500. Mr. and Mrs. Smith aren't there to pay her, so she leaves them an invoice. The double entry would be debit Mr. and Mrs. Smith because they're customers who owe Molly money, which also counts as an asset of the business, and credit sales. Later that afternoon, Molly goes to Staples and spends £50 on some stationery for the business to use, using the cash she earned earlier. The double entry would be debit postage and stationery, which is an expense account. Stationery doesn't count as an asset of the business because it's likely to be used up within a year, and credit cash. Molly asks, what then happens to the individual bookkeeping accounts, such as the bank account or the postage and stationery account? Everything that's gone into them or been taken out of them gets added up, and then the totals get summarised into the business's financial statements, which consist of 2 basic pages. All the income and expense accounts go into a page called the profit and loss account, and all the assets and liabilities go into a page called the balance sheet. Here's an example of a profit and loss account. The income is here, and the expenses are here. And here's an example of a balance sheet, showing the assets and the liabilities. For more information about the profit and loss account and balance sheet,